looking ahead a little bit, I always say that, we can never be so tunnel vision that we're just looking at what we're doing. We got to think about how this fits into the scheme of things. I look at where we're going with this, and I know that working capital is coming up, and I know that cash flow is coming up, and I want to make sure that I'm teaching this in a way that we're understanding how these pieces fit in, because a week off in between is like, I mean, I don't remember what I did last week. So, and you're all busy at work as well. So I want to try and do my best to kind of to front run some stuff here. Now, what we've got here was this day on the income statement. The income statement obviously is one of the main financial statements, right? We've got we've got the balance sheet, which is usually how I begin my sort of tour of financial statement analysis, is with the balance sheet, because the balance sheet, is that is the thing that really starts it all off. You cannot start a business unless you have a balance sheet, because you have to raise capital, and then you've got to take that capital, cash from the capital raise, put the assets in place, and now you got a business. So, on day one, you have a balance sheet, and you don't necessarily have an income statement until you actually start, selling stuff. So I always start with the balance sheet, but we're not going to, do much with that today, except, we think about, a balance sheet is obviously assets equal to liabilities and equity. And, what happens when you raise capital, of course, is that you take money from people, and then that's their contribution to the business, is that capital. Well, now we have to show them, of course, that that we're doing something with the cash that they've given us. And that is hopefully generating, profits, cash flows, whatever, however you want to think about it. So the initial equity investment is going to show up here in equity, and then the way we track this going forward, of course, is we need to figure out what the business is doing in terms of revenues, expenses, profits, so that we can report back to those investors. So that is done on the income statement. So we've got an income statement here, which is going to track over a period the revenues and the expenses. This is what we're going to get into a lot of detail with today.